5 a.m. in New York City. Good morning, I'm Bonnie Quinn with your Bloomberg Brief. Here's what you need to know. Markets in anticipation mode ahead of the Fed's last interest rate decision of the year, along with an updated summary of economic projections. President Trump raises market share concerns around Netflix's planned acquisition of Warner Brothers. The Justice Department will review the transaction. And $1 trillion. That's China's trade surplus in the 11 months to November. Exports rebounding, just not to the U.S. All right, let's take a look at these markets as we kick off the trading week. Futures pointed higher. Remember, we did eke out a gain in the S&P 500 last week. And we, in fact, gained 1% for the Nasdaq 100. To that point, we have a new call today. Ed Yardeni finally finished with his IT and services and technology overweight call that he's had for the last 15 years. He's now saying add to what's already an overweight in financials and also add a new overweight in healthcare, also adding to an overweight in industrials. So a very big call there from Ed Yardeni, one of our favorite guests on the show typically. Let's take a look at the bond universe because those yields have been climbing. We're right up to 4.80 now on the 30-year yield. Some money coming out of bonds ahead of the FOMC meeting. And then I want to point to copper as well, already up 30% year to date on the London Metal Exchange. It is at a record. This, of course, on the China news. Also the news that the Politburo is going to prioritize domestic consumption in 2026, and that should call for some copper. All right, let's get to some individual market movers now. Over to London and Valerie Teitel. Valerie.
Good morning, Vonnie. Let's start with a check in the entertainment industry. As you mentioned, President Trump throwing a bit of cold water on the proposed merger between Netflix and Warner Brothers. We're seeing the share price move reverse a bit of yesterday. So we have Netflix in the green, Warner Brothers in the red, reversing some of the Friday's move as the odds of this deal closing in 2026 has fallen quite steeply on Polymarket as Trump flags some regulatory concerns on the horizon. Let's move over to the tech space. There is a Wall Street Journal report that IBM is eyeing a acquisition of Confluent for around $11 billion. Vonnie, this would mark one of the biggest acquisitions that IBM has ever made. We're seeing shares of Confluent trade higher by the tune of 32% in pre-market. IBM, little change, flat to the downside. This marks IBM attempting to make up lost ground when it comes to the AI race. Lastly, let's talk about quarterly index rebalancing. S&P 500 as of December 22nd will now be including the shares of Carvana. It seems like the market, this found the market a bit unexpected. We are seeing shares of Carvana up some nearly 9% so far in pre-market trade. Bonnie?
Fascinating. Valerie, thank you so much and happy Monday. Also coming up in this hour, we'll be looking ahead to a busy week of data and that Fed decision with Sonja Marten of DZ Bank. Our top story this morning, President Trump responding to the Netflix-Warner Brothers deal.
Well, that's got to go through a process, and we'll see what happens. Netflix is a great company, and they've done a phenomenal job. Ted is a fantastic man. I have a lot of respect for him. But it is a big market share. There's no question about it. It could be a problem.
Joining us now is Bloomberg Deals reporter Manuel Baigori. So, Manuel, we have exclusive reporting that said that Ted Sarandos spoke to Trump about this in November, and Trump said that Warner Brothers should go to the highest bidder. Now, he didn't say anything about antitrust concerns. How much can the president actually sway what happens next?
Yeah, Vonnie, what an amazing deal, right? I kept that so busy in the run-up last week and to see it announced. I mean, now after the deal has been agreed, the tough job to basically get these to completion phase starts, and antitrust will be a key issue. Just piecing regulators and overcoming those potential hurdles is going to keep the lawyers on this deal really busy. I mean, it's still too early to call it. I mean, obviously, large deals of this magnitude, which are very transformative, not only for the companies, but for the whole industry in the U.S. and globally, will be highly scrutinized. And ultimately, it will come down to how it may affect the market share that Trump was referring to, but also how it's going to impact the consumer. That is something that regulators will watch very, very closely. Obviously, we need to keep in mind that Netflix is offering a $5.8 billion breakup fee, also to assuage concerns by including Warner Bros.
Yeah, really
obviously.
putting their money where their mouth is. They also lost no time in informing their customers, including me, on Friday that they had taken Warner Brothers into their fold already, which I was shocked at. Isn't there a concern that I will have to decide to either pay more when this happens for my service or leave altogether?
Yeah, I'm sure Netflix, if this deal comes together in the end and it gets completed, when it comes to the integration part, they will have to think that very thoroughly how to potentially pass some of that onto the consumer, like yourself, Bonnie. But obviously, they'll have to be very, very careful, very mindful about how that reflects into, say, the final price of subscriptions, because obviously consumers can be quite price sensitive as well. And there is other offerings, right? But needless to say, Netflix has been very successful in the subscription model in streaming, and they have a very unique global franchise. There are other competitors out there that are trying to ramp up as well. Whether or not and how it impacts the final price for consumers is still a little bit early. But yeah, you were right. They were quick to make that clear for their subscribers as well. Okay,
I have to ask, are you a subscriber, Manuel?
I am indeed.
I knew you were. You were hiding that detail.
And I got that too.
That is Bloomberg's Manuel Baigorri. Thank you. The Trump administration is preparing to unveil a farm aid package offering $12 billion in assistance to farmers hit by high crop prices and tariffs. Let's get more with Bloomberg's Brendan Murray. Brendan, if this is a one-off payment, how is it going to help farmers into the future?
Yeah, exactly. It sounds like the checks that are going to go out to farmers are going to amount to something like $6,000 or $8,000 per farm. That'll get them through the next couple of months until the planting season comes around in the spring. And so it will basically buy the president some time with American farmers who are growing frustrated that they're not the beneficiaries of these trade deals that the White House is going around the world and negotiating. So soybean prices have saw a nice boost after the truce with China was negotiated in late October, but they're coming back down now. And so the timing of this help for American farmers, couldn't come at a better time here right before the holidays.
Yeah, exactly. At least it helps for now. But what other markets can these farmers tap? I mean, if China doesn't come back in the way it was, then they're in real trouble. And, you have to remember the EU, butter mountains, the wine lakes and so on. That went on for decades and everyone lost out, including the people who were trying to store all of this surplus butter, wine and what have you.
Yeah, exactly. I mean, this is the big the argument against some of these trade negotiations that the Trump administration is doing. They impose higher tariffs on trading partners, and then the question is, will those trading partners continue to buy U.S. goods, or will they themselves go seek other markets and leave American exporters at a disadvantage? So this is really the culmination of a year of trade policy that we've seen a lot of disruption in, and we've talked a lot about how importers are hurt by tariffs, but this is the other part of that story. Will the Trump administration be able to open those export markets for key political constituencies like farmers heading into the midterm election year of 2026?
Brendan, can you give us an update on SCOTUS and when we might anticipate some kind of a decision on trade from the Supreme Court? Not that there aren't other avenues open to the administration even when we get that decision, but at least we need that decision first.
Yeah, exactly. We don't know exactly when the Supreme Court is going to hand down that ruling. The people that we have talked to have said it could come before the end of the year, but it's still the Supreme Court works on a much slower timetable than a lot of the participants in that case would like. But no doubt that is going to be a key question answered as to whether the president can use that broad use of tariffs, or if the court rules against him, as a lot of people, including prediction markets, anticipate, he'll have to use other more legally sound authorities. The Trump administration says they feel like they can replicate the whole suite of tariffs with those other authorities, but it's going to be a slower, more deliberate process and could also lead to more lawsuits of a different variety than the one that's currently before the High Court.
Definitely very thorny. Brendan, thank you so much for joining. That is Bloomberg trade czar Brendan Murray. And in China, the nation's annual trade surplus exceeded $1 trillion for the first time, despite a deepening plunge in shipments to the United States. Exports rose 5.9% over last year overall. Bloomberg senior reporter for Chinese economy and government James Mager joins us now from Beijing. James, if China has expanded trade with other countries to replace the US, does it even need the US anymore?
I mean, China is still, or Chinese companies, I should say, are still selling about $1 billion worth of stuff to America every day. You know, there's still $1 billion of phones and, you know, everything from T-shirts to phones going into containers to cross the Pacific Ocean to go to LA port, to go to the other ports in America. So, you know, you can't just take that away and have nothing happen. Obviously, the companies that are still selling those goods depend on American customers, even though, as you're saying, you've seen double-digit falls in exports to the U.S. For the last 8 months. I mean, America is still a substantial market for Chinese companies, and lots of Chinese goods are making their way to America via third countries now. You know, Vietnam being probably the most, the biggest one, but Thailand, Malaysia, the Philippines, Indonesia, Mexico. There are lots of Chinese components and Chinese goods that are going to those places, being transformed or not transformed, and then eventually making their way into America. So, the Chinese companies cannot do without American, or they would make a lot less money if they had to do completely without America's market. But, I think what you're seeing here today is in the data today is two things. One, there are other markets in the world. America is not the only place that wants to buy things from China. There are other companies in other countries around the world that do value Chinese goods. They see them as increasingly good quality. They see them as cheap. And they want to buy from China. And the second thing we're seeing is really the biggest story, I think, is how weak Chinese domestic demand is, and how much more they're able to fulfill their own needs domestically, so they don't have to go and buy from other countries. And I think that's where you're seeing this massive trade surplus coming from.
So on that point, the Politburo has also now decided to prioritize boosting domestic demand in 2026. But China has been trying to boost consumption for a long time, right? So does this mean we're going to see some kind of stimulus getting rolled out or some kind of a one-time incentive?
I think, if I can't explain the difference between prioritizing domestic consumption this year for 2026, then last year's aim for 2025, which was boosting domestic consumption. These are very, very, it's kind of a how many angels can dance on the head of a pin kind of questions, trying to pass the difference in that. I think the people who are looking at this, saying that there's going to be a little bit more stimulus, there is going to be a little bit more of a focus on the domestic market, but it isn't really a massive change in, I think, how the government is seeing the domestic economy. And also, I don't think that's then going to flow through to foreign exporters who might want to try and export to the Chinese economy. And the reason for that is, as I said, the stimulus that people are expecting is not very large, so the effect is not going to be that large. And secondly, Chinese companies are more capable and more able to fill those holes, fill those gaps. China is less reliant than it's ever been really on imports. And so even if there is a boost in the domestic economy, a lot of that is just going to be taken up by Chinese companies, which are more competitive and often cheaper than their foreign competitors. So even if there is a domestic rebalancing in China, the flow-through effects of that to foreign countries is going to be much less than, say, in 2008, when you saw a massive stimulus from the government, and that flowed through all over the world. It was one of the things that really brought the world out of the global financial crisis. I don't think we're going to see something like that this time.
James, amazing context. Thank you so much. That is James Mager there in Beijing. Now to other top stories trending on the terminal this morning. ECB Executive Board member Isabel Schnabel says she's comfortable with investor bets that the central bank's next move will be a rate hike. She warned that risks to the economy and inflation are tilted to the upside. The ECB meets next week. Wall Street research veteran Ed Yardeni now recommends effectively going underweight Mag 7 stocks, reversing his firm's 15-year bet on tech. He says every company is evolving into a tech company.
The U.S. now accounts for 65% of the market cap of the world stock market, so it's hard to recommend overweighting something that's already quite overweight.
And President Trump expressing disappointment in Ukrainian President Volodymyr Zelensky's handling of a U.S. proposal to end the war with Russia. The US says its negotiators had agreed with Kyiv on a framework of security arrangements. However, there was little indication of a major breakthrough. Coming up, Jamie Dimon says Europe has a real problem and that's bad for the United States. More from Dimon at the Reagan National Defense Forum coming right up. This is Bloomberg. This is Bloomberg Brief. I'm Bonnie Quinn in New York. JP Morgan CEO Jamie Dimon raising concerns over Europe and suggesting that the US needs to help them for their own good. He spoke over the weekend with Bloomberg's Caroline Hyde at the Reagan National Defense Forum.
Europe has a real problem. It's very hard to look at the world and we have moving tectonic plates. You've heard us spoken about. It's AI. The enemy's in the satellite up above and in your computer systems right now. And the world changed. The other tectonic plates, the rise of China, huge global deficits, social network programs that probably can't be maintained over a long period of time. So Europe has a problem. I think they accomplished an unbelievable thing when the Euro got together, the EC, and they said, let's live in peace and not war. They had World War I and World War II, but they had the Franco-Prussian Wars, the Napoleonic Wars, the 100 Years' War, the War of the Roses. And so living in peace is a good thing, but it got bogged down. They never finished the common market. It takes 27 nations, to make a decision. They let their military drop dramatically. It's very bureaucratic, which is why part of the reason that they lost Britain to the EU, which I think makes it bad for both of them, by the way. And so you got to be honest about this. So, and those tectonic plates may move over 20 years. But if we ever write a book about how the West was lost, it will be because of the following. It will be because of we didn't get our act together here, and we go through all the policies here, that we didn't have the strongest military in the world, and that we allowed Europe to fall apart. And so I have a slightly different point of view about Europe. They have some wonderful things, but they've gone from 90% of the GDP of America to 65. That's not because America did anything bad to them. It's their own bureaucracy, their own cost, they do some wonderful things on their safety nets. But they've driven business out, they've driven investment out, they've driven innovation out. It's kind of coming back. I think the leadership, Merz, Macron, Maloney, Starmer, I think they know. I just think politics is really, really hard. Therefore, the fragmentation of Europe, if they fragment, that's exactly what some of our adversaries want. They want to go back to a world like that, and then you kind of have a world that was like it was before World War I, everybody out for themselves. Everyone's got different national security interests, whether it's food or energy or water, and China's a huge country who wants to do bilateral negotiations with every country. If they fragment, then you can say that that America First will not be around anymore. It will hurt us more than anybody else because they are a major ally in every single way, including common values, which are really important. So therefore, I think we should be using our American capability, strength, coercion, democracy, trade, investment to urge them to do what's in their own self-interest, which is military and economic, and the economic is equally important. If they go to 60% of our GDP, then 55, then 50, they won't be able to afford the military. They'll have more polarization. They won't be able to afford their safety nets, et cetera. So I think we need a long-term strategy to help them become strong. A weak Europe is bad for us. It's bad for the civilized world. It's bad for the free and democratic world.
JP Morgan CEO Jamie Dimon speaking alongside RTX CEO Christopher Callio at the Reagan National Defense Forum on Saturday. Coming up, IBM nears roughly $11 billion of a deal for Confluent. A look at what's making headlines in your front page news next. This is Bloomberg. This is Bloomberg Brief. I'm Bonnie Quinn in New York, and it's time now for your front page news. First up, the New York Times leading with Thailand launching airstrikes on Cambodia in a new wave of violence in a border dispute. The Times says it's a sharp escalation between the two nations that President Trump claimed to have ended. The neighbours share a near 500-mile-long boundary, but large parts of it are undefined and home to centuries-old temples. Next up, the Financial Times reports France is shielding Russian assets worth 18 billion euros from the EU push for reparations loans to Ukraine. The FT says France has withheld any details on the institutions holding the Russian state funds and how any interest accrued is used. France claims it's an issue of client confidentiality. The assets in France are the second biggest accumulation of frozen Russian central bank assets in Europe. And finally, the Wall Street Journal is reporting IBM is nearing a roughly $11 billion deal for Confluent, which manages streams of real-time data used in big AI models. The Journal reports the deal could be announced as soon as today, but the talks could still fall apart. All right, well, let's have a look at what we are seeing. Futures-wise, we are looking higher this morning. Don't forget, there's only 8 trading sessions left, so that Santa Claus rally, if it's supposed to come in the 5 sessions leading up to Christmas, well, it better start soon, right? And of course, we are looking forward to that Fed meeting, the 10-year yield, just a few basis points higher than last week, so a little money coming out of fixed income, and really not much change to the US dollar index. But coming up, we're going to get to that dollar index because we'll be looking ahead to the FOMC decision with Sonja Marten of DZ Bank. That and all of the other central bank decisions, of course, in the coming days. This is Bloomberg. It's 5:30 a.m. in New York City. Good morning, I'm Bonnie Quinn with your Bloomberg Brief. Here's what you need to know. Markets in anticipation mode ahead of the Fed's last rate decision of the year and that updated summary of economic projections. President Trump raises market share concerns around Netflix's planned acquisition of Warner Brothers. The Justice Department will review. And farm aid. The Trump administration plans to unveil a package offering $12 billion in assistance to farmers hit by low prices and tariffs. Let's take a look at markets now. We have a few hours to go, obviously, for the open, but we are kicking Monday off on a positive note, at least regarding equities. Futures pointed higher across the major indices, and don't forget the Nasdaq 100 put on 1 percentage point last week. The S&P 500 was up 0.3% last week. So we could be looking at a Santa Claus rally. A few more sessions to go, and I guess it's the last 5 sessions before Christmas that are technically part of that Santa Claus rally. But we do have the Fed, of course, on Wednesday as well. Ed Yardeni out with a call, retiring his IT and communication services overweight, essentially the Mag 7. He's now recommending overweighting more financials and industrials and beginning an overweight in healthcare. Let's take a look at bonds because we're certainly keeping an eye on where those particularly longer end yields go. And of course, the 2-year yield, which is sensitive to Fed decisions too, all rising today by about a basis point. They put on a few basis points last week. And copper then at a record as well. It's up 30% already this year, but news out of China sending that metal to a record. Let's get to some individual movers now. Over to London and Valerie Teitel. Valerie.
Good morning, Bonnie. Let's start with a check in the entertainment industry around this Netflix Warner Brothers tie-up. We did hear from President Trump, as you mentioned, throwing a bit of cold water on the deal, making investors a bit worried about some regulatory action off the back of this. So we are reversing around a quarter of Friday's move when this deal was announced. Warner Brothers Discovery in the red, down 1.7%. Netflix higher by just 1%. This also follows with what we've seen in the prediction markets. Bonnie, take a look at Poly Market. The odds previously were around 60% of this deal closing. They've now dropped all the way down to 23. Moving on to some maybe perhaps more acquisitions to be announced today. The Wall Street Journal talking about IBM is nearing a deal, a $11 billion deal in its acquisition with Confluent. This would be the biggest acquisition by IBM in recent memory. Goes back to all of them buffing up their tools when it comes to AI. The Wall Street Journal mentioning that this deal could be announced as soon as today. We're seeing shares of Confluent higher by nearly 28% in pre-market trade. Lastly, let's talk about S&P 500 index rebalancing. The quarterly rebalancing to happen on December 22nd is now going to include Carvana in the index. It does seem like this caught the market a bit on the wrong side. We're seeing shares of Carvana higher by 9% in pre-market trade. Bonnie?
All right, Valerie, thank you so much. A lot of big movers there. That's Valerie Teitel. Back to our headline, the Trump administration planning to unveil later a $12 billion package to help assist farmers. Joining us now from Washington is Bloomberg's Enda Curran. Sounds like a lot of money, Enda, but if trade routes are completely suspended for these farmers, a one-time payment is not really going to help that much in the long run, is it?
Yeah, Vonnie, this has been a growing source of contention with farmers. As you know, farmers are a big political supporter of President Trump, so there is an announcement coming today at 2 p.m. in the White House with a group of farmers where that aid is expected to be announced. And what's happening here in particular is the fact that farmers are worried that the market for their goods in China has dried up in recent years and that China isn't buying the volume of soybean in particular that they talked about in that recent trade agreement. Of course, we know that China has diversified its markets to source products from other areas anyway, such as Brazil and Argentina, for example. So it's kind of a repeat also of a playbook from Trump's first administration when, of course, he had tensions with China, trade tariffs, trade negotiations, and during that period, the president also rolled out support for farmers. We are now seeing a repeat of that. I think the critical thing to watch out for in the weeks and months ahead will be the continued pace of China purchase of agricultural goods. The trade representative, Jameson Greer, said they're on track to buy the volume of soybeans they promised in the recent agreement, but that's one that will need to be very closely watched, I think, in the weeks and months ahead.
You know, and if it weren't all bad news for farmers, you know, the farmers that decided to get out of beef because it just wasn't paying them, now they're having to pay more for their beef. And Trump advisors apparently are looking for ways to bring down the price of beef for the American consumer. How will they do that more than they have already?
Well, that particular point, that's a report in the Wall Street Journal this morning, Vonnie. We do know that the administration is talking about food prices in general, inflation, cost of living, and they have identified beef prices. For example, White House officials have spoken about the efforts the White House made earlier this year to bring down the price of eggs, which they say was a success. And now they're talking about doing the same thing with beef. But they're also warning that's more complicated. You know, in recent interviews, officials have been saying there are issues there around drought, around supply. It's going to take longer to fix that beef supply chain than it did to fix the egg supply chain. So we'll have to see what details they come up with. But the important point is here, it nods to the economic story, which is the inflation pressures haven't fully gone away yet. And of course, it nods to the political story heading into next year, that the White House is clearly worried that voters continue to be concerned about prices, and they're going to try and get that fixed ahead of those November midterms next year.
Well, you said the word inflation, and we are obviously looking at a Federal Reserve that is very likely, according to the market, to cut this week. It's an almost certainty. But if that inflation rears its head again, will they be making a mistake?
Well, this is a big question, Vonnie. They are expected to cut. The market's fully priced, but you know, we know there's a lot of tension among the policymakers. Some are more worried about prices, some are more worried about employment, for example. We haven't had a lot of official data going into this meeting. We've had very little, obviously. So that's kind of obviously complicated the picture. Private sector readings and sentiment surveys suggest the labour market is softening. We just don't know by how much. The one school of thought is that if the Fed does cut this week, they will probably say, look, we're maybe going to go on hold for a little while after this, see how things play out. Inflation remains above our target, around 3%. The core PCE on Friday was encouraging, however. That will certainly give some comfort to the doves on the committee. But the thinking is they might say, let's go month by month next year and see where inflation is. But I think right here, right now, the thinking is they will go this week because they are more concerned about the jobs market. And then as we get more official data coming in over the months ahead, they'll have a clearer picture on where jobs and inflation are and probably give policy a sharper focus as we head into the new year.
And Curran covers the gamut for us there in Washington. Our thanks to you for joining us this morning. Let's continue that conversation now because we do have a week of central bank decisions likely to keep FX traders pretty busy. A little pressure on the dollar in the run-up to the FOMC as traders weigh the health of the US economy and, of course, a potential Hassad succession to the current Fed chair. Joining us now is Sonja Marten, head of FX and monetary policy at DZ Bank. Sonja, just following on from what Enda said there, what can Powell say on Wednesday, assuming there is a cut, given that he already said you slow down in foggy conditions? Did the conditions suddenly get less foggy in the last few weeks?
No, they certainly haven't gotten less foggy. They will get a little bit less foggy after the FOMC because that's when we're going to get some key data points coming in, the CPI and, of course, the labor market report. The Fed is likely to cut, as was just mentioned, and I think the best strategy for Jerome Powell is to accompany this with some very cautious wording. He's likely to highlight the fact that the future path for monetary policy in the US is not set, that the market should not expect successive rate cuts at the upcoming meetings. And I think that's going to be designed to sort of make clear that the Fed continues to act in a very data-dependent manner and will not be pressured into more aggressive cuts also by the White House. So I think that's going to be the wording to accompany this cut. So it's going to be a cut with a cautious, maybe slightly hawkish tone in the statement.
Sonja, does the decision or the SEP, if it changes or even if it doesn't change, move the dollar? Or do we have to wait for decisions out of the Bank of Japan and the ECB as well?
I think the market obviously is set for a rate cut from the Fed. It's fully priced in at this point, so it's not going to be a massive surprise. Maybe depending on how careful Powell is in his wording, that could give the dollar a little bit of a lift. But having said that, we are waiting for the announcement of his replacement. We all know it's probably going to be Kevin Hassett. The White House has yet to officially confirm this. And to be honest, I wouldn't be surprised if Trump chose a moment soon after the upcoming Fed meeting to maybe make this announcement, which could then put some pressure on the dollar yen.
Why would it put pressure on the dollar yen? At least we'd have some kind of certainty, although obviously if it was a nominee, that person would have to go through the process of getting confirmed and so on. But there would be some kind of certainty as to at least what the lookout would be.
Well, I mean, Kevin Hassett is probably one of the more controversial suggestions or nominees that we had for this job. I mean, I think the market had other preferences. Kevin Hassett is considered to be very close to Trump, and he's likely to be quite dovish. I mean, I'm not saying that the Fed independence is going to be, necessarily will be threatened severely next year. But of course, there is that issue. We don't really know how that's going to play out. We don't really know exactly who's going to be on the board. There are some other question marks. Who's going to replace Steve Moran, and what's going to happen to Lisa Cook? So there's a few, there's some question marks. There's also some concerns that Trump may try to influence the rotation of the regional Fed members. So there's that uncertainty. But Kevin Hassett is certainly seen as someone very close to Trump. And I think it sort of suggests that we're definitely looking at a more dovish Fed going forward.
Sonja, what does the steepening of the yield curve and indeed just the yield curve going higher this week, what does that tell you as an FX strategist?
Well, I mean, we have seen obviously a lot of volatility in this market this year and the previous years. The fact that the yields have risen again, I think there is several factors at play. On the positive side, you could note that people have become, I think, somewhat more optimistic on the prospects for the US economy in general. We have seen some pricing out of more aggressive rate cuts, over the last few months. We have also seen some concerns on the other side on fiscal policy and the fact that, we had a long shutdown that's going to place an additional strain on the economy. Fiscal spending is an issue in the US and will remain so for the years to come. So that's kind of the factors that are playing out here. I think the 10-year yield in the US is going to continue to rise moderately, sort of very much reflecting fiscal concerns, whereas, of course, in the short end, we have more Fed cuts coming our way. So that does suggest that the curve will steepen somewhat more.
I have to ask you about the ECB and particularly Isabel Schnabel. She told Bloomberg exclusively that, if she were to be the next ECB head, if she were asked, that she would be ready to do the job. Would she make a good person to succeed Christine Lagarde, whose term is up in less than 2 years?
Well, I think she'd certainly stand for a very credible policy. I'm not sure, to be honest, what her chances are. I mean, there's a lot of politics involved in this choice. She is definitely known for having strong views on monetary policy. So I think that's a good thing. Again, I'm not sure what the probability is that she will succeed Lagarde, but I think it's the most important skill to have when you take that position is to communicate clearly with the market. And I think we've seen in the past, we've certainly seen some ECB presidents that have had some issues with this. Christine Lagarde, I think, sets a very high standard for whoever is going to succeed her.
For sure. The euro has been strengthening, right, in the last few days. Is that more of a dollar story? And where do you see it, given all the cross currents? Where do you see it, into the new year?
Well, I agree with you. I think it's mainly been a dollar move. We've seen the dollar weaken pretty much across the board. as the market focuses on this upcoming Fed rate cut. The euro has very little, strength of its own right now. We are in a very difficult economic situation in the Eurozone, particularly when we look obviously at Germany, a government that's been struggling to find majorities for key laws that had to be passed through Parliament last week. And of course, a big reform agenda that doesn't seem to be tackled at all at the moment. So all of that is speaking against the euro right now. Into next year, I'm a bit more optimistic on growth in the Eurozone. So we are looking for a somewhat stronger euro. But I think, to be honest, something slightly above 120 is probably going to be the end of that story, just because, it's easy to be dollar bearish. It's much harder to be euro bullish.
That's a good way to end things. Sonja, thank you so much. Enjoy the week. It's going to be fun. That's Sonja Marten of DZ Bank. Now to other top stories trending on the terminal this morning. President Trump expressing disappointment in Ukrainian President Volodymyr Zelensky's handling of a U.S. proposal to end the war with Russia. The U.S. said its negotiators had agreed with Kyiv on a, quote, framework of security arrangements. However, there was little indication of a major breakthrough. Unilever's Magnum ice cream starts trading today in Amsterdam, London and New York. The spin-off was valued at more than $9 billion. The company, which owns the Ben & Jerry's and Cornetto brands, is debuting a month later than initially planned after the listing was delayed by the US government shutdown. Millionaire Alan Howard, whose hedge fund is the largest operating out of Abu Dhabi, said the Gulf city was well on its way to joining Western centres like London and New York as a global financial hub. The region's pro-business regulation, UK rule of law and time zone that allows trading across regions have transformed Abu Dhabi, according to Howard. Coming up, President Trump throwing cold water on the Netflix-Warner Brothers deal over antitrust concerns. More next. This is Bloomberg. This is Bloomberg Brief. I'm Bonnie Quinn in New York. President Trump has responded to Netflix's plan to acquire Warner Brothers. Take a listen.
Well, that's got to go through a process, and we'll see what happens. Netflix is a great company, and they've done a phenomenal job. Ted is a fantastic man. I have a lot of respect for him. But it is a big market share. There's no question about it. It could be a problem.
Joining us now is Bloomberg's Lonnie Prinsloo. So, Lonnie, what is next? Does it potentially happen that Netflix has to reconfigure this kind of deal, or that the other bidders might even be back in the game?
Yeah, so as you heard, Trump came out with concerns around the combined market value of Netflix and Warner Brothers, saying that it will have to go through a lengthy process with the US Department of Justice over antitrust concerns, and that he will be a part of vetting that deal. That, of course, is significant because Trump also has ties with Paramount CEO Larry Ellis, and Paramount came out with the first moves on Warner Brothers. So there is a number of antitrust concerns, and we will have to see how Warner Brothers go about this. Even the polls, Polymarket said 60% chance of this deal coming through in 2026. Before Trump's comments, after his comments, it was only at 23% that the deal would come through in 2026.
The betting markets obviously think Trump's got some sway, or that his word means something about the antitrust division of the Justice Department. But Netflix does have an argument for the deal. It obviously is going to say that it's going to be better for the consumer. What is that argument?
Sure. So Netflix is coming out saying about 75% of HBO's streaming customers are already part of their platform. And of course, customers can benefit from bundle pricing. There's also an argument that their competitors are not just a Paramount or a Disney. Their competitors is a TikTok, it's a YouTube. Even so, if you take the combined revenues of Netflix and Warner Brothers, their revenues are already more than that of YouTube. And of course, it's a massive platform that will be created with more than 450 million subscribers.
Yeah, a lot of subscribers. Lonnie, thank you so much. We'll continue to follow this with great interest. That's Bloomberg's Lonnie Prinsloo. Ed Yardeni of Yardeni Research is now recommending investors underweight the Magnificent Seven tech stocks versus the rest of the S&P 500. He spoke with Bloomberg's Haslinda Amin.
I've been recommending overweighting information technology, communication service,
since 2010. The problem is it's worked all too well. The two sectors now account for a humongous 45% of the market cap of the S&P 500. Of course, their earnings share has also increased, but nowhere near as far. And the same thing can be said about looking at the U.S. versus the global economy. When you look at the U.S. MSCI relative to the world MSCI index, what you see is the U.S. now accounts for 65% of the market cap of the world stock market. So it's hard to recommend overweighting something that's already quite overweight. I mean, if you just told people just to maintain the current weight of the index, that would still be an overweight position relative to what most people would think would be a diversified portfolio.
And what's fundamentally changed? Because when we talk about, overstretched valuations, they've been that way for a very long time now. And when you take a look at the AI cycle, people still point to how it is still at the nascent stage.
Well, I would say with regards to the Magnificent Seven, what's I think has changed is they're competing more aggressively against each other, and they've got more competition coming out of nowhere and somewhere on a regular basis here. We recently saw that Google introduced Gemini 3, which suddenly made everybody kind of reconsider just how strong the position is of OpenAI and OpenAI's relationship to lots of other AI-related companies. And then just at the same time, DeepSeek came back. Remember, DeepSeek, when it introduced its model back in January of this year, kind of shocked everybody because they were able to put together a pretty good AI model that worked as well as some of the other ones in the United States, but apparently it was trained on chips that cost a lot less. And now it looks like they're doing it again, and there's some talk that the latest version of the DeepSeek model is just as good as Gemini 3. So there's a lot of competition. The profit margins have been awfully high from the Magnificent Seven. That usually invites a lot of competition, and that's exactly what's happening.
Ed Yardeni there. Coming up, we'll get you set up for your trading week. This is Bloomberg. This is Bloomberg Brief. I'm Bonnie Quinn in New York. Now a look at what's ahead this week. One more piece of jobs data ahead of the Fed decision, with JOLTS job openings coming out on Tuesday. Then the main event, a Fed rate decision Wednesday, plus of course Powell's news conference and the SEP. And Fed speak returns with Paulson, Hammack and Goolsbee all set to speak Friday. Let's take a look at some micro movers now, the ones that are moving before the bell. Warner Brothers, for example, down 1.5% on Trump warning that the Netflix-Warner deal may pose an antitrust problem. So you have Warner Brothers lower, Netflix actually higher this morning off the back of that. IBM down about 0.2%. The Wall Street Journal is reporting that it's close to buying Confluent. It will be an $11 billion deal if it does in fact happen. And Carvana will join the S&P 500. So it is up close to 10% in the pre-market. Let's take a look at the macro environment now. We have futures pointed higher and indeed gaining ground as we head through the morning. This, of course, as we look towards the Santa Claus rally potentially. The two-year yield up another basis point. We did move a little higher last week, 357. Now the whole yield curve has moved higher. And copper at a record. China is going to boost domestic consumption next year. That's just one of the things going on with that precious metal, up 30% already year to date. That's it for Bloomberg Brief.